How's everyone doing today? We are live here for Friday session. The Dow Jones just basically hit 50,000 for the first time in history. And on the surface, it looks like a party. If you pulled up your portfolio, have you looked at your portfolio today? Look at all that green today. It is looking ultra green. But here's the thing, we saw a brutal risk off purge yesterday. Some of you guys saw a massive roarback today, but most investors are missing one of the most important details. And the market isn't just going up recently, it's also mutating. You see, there's this AI capex trap. If you were to take a look at Microsoft or Alphabet, take a look at the different companies. We'll pull up the AI companies here. Yesterday, the tech world got some word that Alphabet and Amazon signaled that they're doubling down on AI spending, that they were talking about 180 billion in capex, capital expenditure. But what's interesting, this is the miss here, is that most retail investors saw the AI growth and they bought the dip, but then institutions sold because the market is transitioning from not just AI hype, but AI execution. So the tech giants, when they decide to spend more money, they also eat against their margins. Their margins go down. They don't make as much. So who actually won today? Well, we see Nvidia, Broadcom. Okay, you got the market. It's deciding which companies in the AI markets are selling the shovels. That's a massive distinction that separates the winners from the zombie tech stocks. The stocks that are getting the most attention right now are in the AI market, but you also have some jobs data that came out this week. You have jobless claims rising slightly, and the S&P 500 rising as well. So here's the other thing that people missed today. We had the labor data, and it was pretty bad. Jobless claims jumped to 231,000, and usually that's bad news for the economy, and it's bad news for stocks. But the stocks went up today. They rallied. So the market's betting now at what could be a Fed rescue. They aren't buying because the economy is strong right now. They're buying because they believe the Fed will be forced to cut rates sooner to stop some of the bleeding in the labor market. And what that means for you as an investor, all right, this is a good news is, or bad news is good news types of situation. And it's also a very dangerous game because we are seeing extreme volatility. The Fed might not come to the rescue. What if they don't decrease interest rates? Most investors are pricing in for that safety net potentially. Then you see them. What if they don't come in with that? So then you have a quiet rotation as well. You see that while other markets were selling off big time, and BigBear.ai had a big recovery, APLD had a big recovery today. Yesterday, we saw that some rotations were pretty intense. You saw Bitcoin sell off down, and then you also had some companies crush it, do really well. Caterpillar surged 7%. Healthcare did okay. You had the oil and gas markets did pretty good. The blue collar markets actually were all green when the whole market was red. And so what does that mean? More infrastructure, more industrial. Why is that important? Because why? The companies that are going to be constructing and focused on the execution of what these lofty dreams have been shared with you about the AI companies, what they plan to do, those boring companies that are doing the electrical, that are doing the foundations, doing the construction, doing the energy demand, the minerals, things like that, those are going to be the most solid plays right now. So simply put, if we're looking at the dashboards for what we're seeing today, once again, Dow at 50,000, it's a milestone, pretty good. But you also have large recoveries today. Take a look at TSSI. They jumped back about 18% today and broke back out from that downtrend. So most companies that we're going to be watching today, one of them could be TSSI. TSSI is a top company that is not just working in the data center market, but proving some of their ROI. Now, what you want to look for, once again, is economy sectors that are leading in this new leg of the bull market. So economy sectors would include some of the companies that make it possible for the technology to work. Okay, so what does that mean? If you look at TSSI, for example, here, you would find that this company is a data center constructor. They are making it possible for data centers to be constructed with the right configuration. This is going to be part of that execution conversation. So integrating high performance computing. They are doing the data center services, the modular edge services. How do we feel about the data center markets? Let me know in the chat right now. Because, I went to the sauna at my gym last night. And we always talk with a lot of people there. And sometimes it's quiet, sometimes it's not. Sometimes I just listen. I was, we have one of the fastest growing channels related to AI markets and investing in the AI markets in data centers. But I also hear the other side where people really don't like data centers. I was talking with some gentlemen last night, really does not like data centers. Thinks that the whole conversation from Elon Musk around putting data centers up into space is a distraction to get people thinking about that's where it's going. But the reality is it's going to crush the environment, building data centers here in the United States all over the place and taking energy away from some households that need that energy. Is there any, weight behind that? Is that true? Have you seen that in local communities? We have seen some local communities say that there's been negative impacts from noise pollution, the sounds, the energy prices, the change in pollution, even potentially polluting the water and using up large amounts of water in major cities and small towns as well. And that there would be a worry that there wouldn't be enough energy for the data centers and that it would negatively impact local communities. While these are all things that are going to be major issues, as we're not making anything up there, that it's quite an issue. They are common among innovations of any time. If you see, for example, if we're looking at the innovations that are happening today, they could be easily compared to some of the innovations that we saw back in the industrial age or during the cell phone age, or when we saw let's say farming, when the gold I live in a town near gold mining, some of the top gold mining here in California, and I can tell you that they are very proud of the history, but not proud of some of the negative impacts on the environment, the communities, and everything else from the gold mining that went on around here, from the hydro cannons that they were firing at mountains to find gold, all of that toxic different minerals and chemicals, sometimes lead, sometimes other things, going into the water supply and hurting the local communities. These are things that are very intense, and there's not much regulation right now around the data centers. And so it should be looked at. Nevertheless, it shouldn't hinder innovation as well. Something you hear from one of the greatest minds in tech, Elon. He also says that one of the main issues in running his companies is not that they have an issue with the rate of innovation, but that the rate of innovation is hindered by red tape put up by governments that is 50 years old, that doesn't apply to today. That is one way to look at it, and I think that there is a lot of value in that, and there's just common sense as well, looking at the positive and negative impacts of things that happen. So one of those things, you don't have that being a negative impact in the market today as one of the conversations, but it is something to consider as you do have some extra conflicts around whether or not data centers are being built on time due to policy changes and things like that, which we'll keep you guys updated on as well. And let me know in the live chat where you're tuning in from. So one of the things that most investors also weren't considering today that I wanted to touch on was that when it comes to the AI markets and the robotics markets, we're just getting started. And one of the drivers that you'd want to consider, especially if you're, if you're hanging out with me, we talk about AI, robotics, quantum, space tech, all of that good stuff. But one of the drivers of those markets is going to be the investments from big tech. So while the large growth engines like Nvidia or let's say Microsoft or Apple have committed to spending more money on things, what does that mean? What does it mean when they spend more money? It means some of the smaller companies that are going to enable them to succeed, like your TSSIs, like your APLDs, okay, like your IRENs, your IERNs, your I'm doing plural language here, but really I mean super microcomputer, NBIS, some of these companies, CIFR, some of these companies that are allowing the larger companies to have success become monumental, become a necessity for the large companies to grow. And so that's really important to realize, is that while you might see general market negativity around more spending, their margins are reduced because companies say, we're going to spend more on AI. It's actually going to balance out, and they might even still surprise. Why is that? Why would they still surprise? Well, two reasons. Number one, why would they invest in it? Because there's tremendous value in it. They've already seen that. So what you might see is, while they invest in it more, and that might be a capital expenditure that's greater than what people anticipated in the AI market, they're also going to rely less on paying employees. We've already seen that as a factor in AI. So people are getting laid off because AI is replacing their jobs. And so maybe the labor goes down. Okay, now we're talking about, what do those people do? Well, we could get into that. But before we do, number two, the spending for the AI companies, not only would they see the labor potentially go away, but they wouldn't be spending unless they saw a return on investment. So the AI markets are returning on investment. It's the same principle that when the large computers used to be the size of a city block, but now you have a computer in your hand, in your phone. Like, your phone can do everything that it previously took a massive computer that took up an entire city block. You have that 25 years ago, 30 years ago, all of that times 1,000 in your hand with your phone. And so the idea is that, as AI gets better, not only will it require less computational power, but the spend and what it will cost for you to use AI will go down because of the innovation. Same way that you can now create a movie with your iPhone. Is this backwards law? People think, oh my gosh, there's going to be more and more energy spend on the data center. This is what I would talk with somebody that says data centers are very, very bad for the environment and things like that, which I totally respect the opinion. You can have any opinion you want. You're entitled to it. I have no desire to change your mind. But one of the things, I thought that as well, and I hear that quite often. But one of the things that I realized about that is that because you might think data centers use a lot of energy, yes, they use a lot of energy. But as computers and GPUs become more efficient, in the future, as we build more, they will use less and less energy because the technology will become more efficient. And so this is really key. If you're thinking about investing in any AI tech, but you think, oh, but it's using a lot of power, and you're thinking about it to where it is right now, almost all technology will be much better, say 5 years from now, 10 years from now. So really important to think about as an investor in these markets is the long-term view from the market looks very good. The financial view, we've already seen some ROI and some returns in many of these markets. And then the technical view, we're still kind of riding some premiums right now in the market, no doubt about it. And we're still at an all-time high, near an all-time high with SPY. So it was expected that we see a pullback. In fact, we might have some more of that here in the next few weeks. And let's see how Monday goes as things cook up. So we have a few really good comments. We got some Michael Anthony saying CTM crashing. Peter is here. Hey, Will, do you think Oracle has hit the bottom yet? Let's take a look at Oracle. And you got Randall here. It seems Mississippi is actively trying to bring data centers. I think it's a good state for it. Okay. There's another positive from that side. I became a Facebook member of a local community here in Pennsylvania just to monitor how the community reacts to Bitfarm's huge data center project development there. I love it. I think it's smart. And not only is it smart as an investor, it's smart as a community member. You know, I love rockets. Would I want a rocket to be blasting off outside of my backyard every day? No. You love rockets to an extent. You know, like I love technology. Would I want to be on my screen all day long? No. I want to go outside. I want to have a hike. I want to go for a walk. I want to go play some golf like we did today. We got a simulator outside. You know, if too much of anything is going to be bad, right? So the moderation of the data centers is totally rightfully moderated. And I love to see you're involved in your community as well. Okay. Alrighty. So as we continue, first of all, guys, thank you so much. We are just about to hit a new milestone. We're just about to hit our new milestone here of 32K on YouTube. We've grown by over 30,000 subscribers over the last 12 months, a little bit over that, or a little bit less than 12 months, a little bit more than 12 months, excuse me. You guys are amazing. And we're on the road to 100,000, which is amazing. Super excited. Appreciate you all. Thanks so much for tuning in. Dean says also using more water cooling than air from energy mechanism. Yep, that's another factor. If NVIDIA spends more on AI, then they will make less money or profits is bad, says Michael Anthony. Yeah, that's key, right? But then you have, is that true though? Is that true? Will they make less money? Because what if they had to pay less to the things that would ordinarily take humans but have been now replaced with AI? Is that a factor? Pretty crazy, right? Peter, thank you. Thank you, Gary. Appreciate it. So APLX was up 48% today. I got a DM, I think it was from John. John, appreciate you. You know, John sent me a bunch of messages. John made $1,000 on an APLX trade. Some stock mates, I think, had some really good gains. We also had some volatility earlier this week. We had a $650 trade we did today on what was it? Oracle. So that was a good trade today. You have some other people reviewing Prophecy. Johnny says, Johnny, I don't know if you're here right now, says Prophecy is working great for short term. Arsphere says, I have some stories. Arsphere's got some really good stories on using Prophecy AI. We've had some people, a few people doubled their accounts recently. That's been absolutely amazing to see. So really good, really amazing testimonials as of recently, guys. I appreciate you all. Thanks so much for tuning on in. And when it comes to what was the stock that we were just about to take a look at real quick? I got time for one more. Lakeland, Florida, new Prophecy member, Waldog. Hey, appreciate you, man. Thanks for tuning in. David, how can you schedule a call with me? Says David. David, let me let me drop a link for you in the chat. Okay, man, there you are. You use that link. All right, so TSSI, there was one stock that I was like, oh, I need to take a look at that. CTM, that's what it was, CTM. Okay, so guys, CTM stock is a defense company with very good financials, and they recently pulled down to 80 cents to 77 cents. They broke pattern a little bit, but I'm still anticipating they are going to make it back to $1 a share and above based on their financials. So let's take a look. First things first with CTM. Now let's take a zoom out here. So CTM is a defense company. They've gone from just about 15 cents a share in December to over $1 a share. This year they just recently pulled back into January from about $1.10 down to 79 cents. They did break pattern here. Let me move my screen a little bit so I can see without tweaking my neck. There we go. That's much better. Hopefully you guys can see me still. There we are. So they sold down to 79 cents recently. Pretty consistently sold down about 10 consecutive days. You can see CTM stock is recently on a run and then recovered today. CTM has pretty good financials. Take a look at their financials. They're at $83 million in market cap. Ooh, this is exciting. Let me pull this up over on Prophecy.ai. Okay. And let me add the financial widget because I'd like to see the financials of CTM inside our own app the way I want to see it. Yeah, let's go. Okay, so total assets right now, they got 28 million, liabilities at 16 million. They've been growing, and you could see that their liabilities were up here, that orange, and lowering. See the orange going down, going down, going down each quarter. Their liabilities have been going down while their growth on their assets has been going up. And it doesn't look so pretty. It's getting there. It's getting there, but it's getting the data here. Revenue at 47 million there. If you take a look here back into a more, you could say, fine-tuned chart here, you got the annual revenues here holding around 40 million, but they're growing quarterly about 25% revenue year over year there. And then you got the annual outlook looking good with total assets jumping to 46 million. Why is that good? Well, if they have $46 million in assets, they got about 9 million in liabilities. That's going to mean that they are currently much higher in assets and liabilities. And that means they're not at risk for anything like bankruptcy or anything like that. They have growing revenues. You can see the revenue has been increasing quarter over quarter once again. So they're up to 14 million with a positive net income. So a company is doing about 14 million in quarterly revenue, and their balance sheet is at 46 million. They have multiple contracts. One of the contracts they recently signed was about 40 plus million. See that? 49 million. There it is. 49.8 million. Then when we look at the news, you also have them into 2025. They signed a $100 million contract as well. $66 million contract there. So they've signed multiple contracts and they got about a $200 million pipeline, but their market cap still sits at just 83 million. So if their market cap is as low as 83 million, they got a backlog of about close to 200 million. They're looking grossly undervalued. So I really like their financials. Have they sold down? Yes. Do I hold long-term positions? Yes. I entered at 87 cents a share, so I'm going to continue to hold over in the Schwab portfolio. I'm going to be looking for some recoveries up to about $1 a share. It's about a 20% to getting up into that $1.30 range, which is a 60% potential recovery. Okay. Okay, so why isn't BBAI getting any contracts, says Shaw's? They're only getting partnerships with no real money behind it. Let's have a look. Have you, like, let me ask you, why do you think? Let's get into it. Keep adding when below $1, just over 5K shares, says Dean. Got it. Okay. Stock Me Silly says Rich Tech Robotics. I don't know that anything has changed too much with Rich Tech, but we could take a look. And day trading knockout. Hey, sorry, Will, don't mean to interrupt. That link doesn't work. Did I send a bad link? Oh. I added an extra E. If you fix the link, it will work for you. Sorry about that. Government shutdown. Is that why you think it is? Okay, that's one. That's one. What else, Shaw's? Because they're playing the long game. That's why. So BigBear.ai is getting hammered, right? They're down to $4, covered to 470. Look at that sell-off. Is there a trend still? Maybe. Sold below that 200-day moving average. See that they've sold off quite a bit. The interesting part about BigBear.ai is that while they've sold down here to about $4 a share, they've also been positioning with a considerable amount of infrastructure, right? They sold down, they're expectedly going to sell down, and this is why, we've talked about this quite a bit. Why they would sell down is because, once again, the revenues didn't increase. So if you wanted to see the company do well, you'd have to see some revenue increases. We got next generation AI customs management for systems for ports and borders. They just came out with that a few days ago. They also have AI powered inspection and trade risk management company, the acquisition. They acquired another different company. They're working with Ask Sage. That's a $250 million valuation that they acquired that company. And the interesting part is they've actually had a tremendous amount of infrastructure. If you go to any airport, major airport in the United States, there's a large minority of airports, you could say, major airports, that have the technology from BigBear.ai in their airport. So why would they continue to decline? Jay Neal's nailed it. Unprofitable, declining revenue, the shareholder dilution. We haven't seen the shareholder dilution. Full conversion on the balance sheet. These notes here secured 125 million principal amount of notes outstanding as of January 2, 2026. Seen a little bit, nothing major. The real reason why they haven't, if you were to look at their backlog, is that they are acquiring companies and they've raised a lot of capital and they are deploying their infrastructure and then anticipating revenue as a result, but they haven't seen revenue hit the bank account. So that's what's going on. For example, like the list of airports is about 12 plus airports, but you can have a lot of airports, you can have a lot of distribution, but if you don't capture value, then you will have a rough time. And so they have distributed a large amount of solutions, including the digital identity stuff, the VeriScan technology, into Denver International Airport, LAX, Chicago, Nashville, JFK, scanning the face of people and acting as security for the TSA and for the ports of entry. But even though they've done that, they've really successfully deployed this technology, they haven't captured that much value as a result. And so that's why they're selling off. Because even though they had a good recovery, their $2 billion market cap, the revenues 33 million are down 20%. So ideally, they've had 2 new acquisitions in the last quarter. So it's possible that they see that pay off into the next quarter and the earnings come in. They have plenty of cash, so they're good runway. They got plenty of runway, but they haven't seen the infrastructure turn into revenue. But they have deployed the infrastructure. Okay, even though they got a UAE ports AI deal as well, it's just a rough go for them right now. If they have revenue show up in the next quarter, they're going to do well. So what do you do? What do you do in a position like that? Well, I'm holding this company for about 3 years to 5 years. I've entered down here in 2024 at $2.80 a share. It's currently at $4.71. So I'm a little bit less than 50%. So I'm still going to continue to hold the company. I think they're going to do well. But once again, if you were to look at some of the projections, you were to look at some of the outlooks, you're going to see some volatility because ultimately the AI sector has a lot of volatility, especially with the new spending for big tech. But then on top of that, you have the capturing of value from Big Bear specifically has been pretty poor compared to how much they've deployed and how much work they put into getting their technology out there. Now they have the partnerships with Palantir, they have the partnerships with Redwire, but we haven't seen that really facilitating to much. So that's why they're continuing to kind of hold down here. So we'll see how they perform. Once again, I continue to hold the company. I don't think that they're comparable to C3 AI. I don't think they deserve as much negative connotation, especially given the lawsuits that have all been proven wrong. We've had a ton of lawsuits that came out that were all just hype, fear-mongering lawsuits, and none of them turned into anything. And so you have that. And then I also don't agree with all of the hype around the stock that people are like, buy these before it's too late, or, buy the dip here on Zacks investment or a warning sign or whatever. I don't agree with the super negative. I think they're a quality value play, a very small and not quite developed financial play or income play. And so if they get the income right, honestly, they executed really well, but they didn't capture income. It's kind of interesting. Usually it's like they capture income and they haven't executed yet. They executed, their technology is in many, many airports already, but they just haven't shown the capture of value. I would imagine that's going to be extremely valuable, the millions of data points they're collecting on all the people that are coming in and out of the US. And I would imagine that would lead to some large contracts. That's the thesis. So I won't hold or change any of my holdings in the long term. That's kind of how it looks. But once again, yeah, volatility doesn't feel good if you're, short term. But definitely seeing some opportunities as well. We'll see if we get any good catalysts over the next few weeks. Could really play into some good growth for them. The Olympics may boost. Yep. All right. Michael, you got a call rating, bottom chart, buy or wait for a dip. FinViz. Yeah, I'm not sure. That's pretty cool. FinViz. I'll take a look, Michael. Thank you, man. Appreciate it. Carl, BBI plans to hold a meeting to authorize doubling its common shares, 500 million to a billion. There you go. Another reason that it could be super volatile. Sometimes those end up being big surges in the stock or the opposite. Average is 660, 640. Ah, you're up there at 640 shots. Okay. Okay. Yeah, it depends what your goals are. If you're 16 years old, buy and hold, my man. At least while you're learning the short game, find quality, hold, and then master the short game while you're holding. That's how you do it. Think Monday we crash again, says 15-minute lecture. He says they tank stocks, gain it back in one day. What's the point? You lost 12K and 40K, then made 15K, and then including other side of port. Interesting. KSCP could definitely take a look at that one. KSCP is going to be one of the top companies related to, let me not mess this up, mining. KSCP. They a mining company? No, they are not a mining company. It's too late on a Friday afternoon. I might have to get off. Quarterly revenue is $3 million a quarter. Negative net income, $9 million a quarter. They're losing, but revenue's up 23%, slightly declining year over year. Balance sheet is up to 41 million. What's their market cap? That's not bad. Net income negative though. What are you thinking with this company, Neil? J. Niels, what do you think of, man? Autonomous data robots for use in monitoring people in malls, parking lots, neighborhoods, and other public areas. Fully autonomous using self-driving technology designed to alert police. Interesting. The next generation of perimeter security. That's pretty cool. I like this. I don't know. I like the vibe. I like the vibe of this, but they're losing money. But I love the vibe though. The vibe's really good. I'm excited to see this. They need one of these. They probably would have a lot of business in some crime-ridden areas. Okay. Interesting. I saw some stuff similar to this in Argentina, actually. Okay. Cool. I don't know. I like it. It's really cool. I like the technology. They haven't been able to turn a profit, but they do have 41 million raised. So they're high risk, very high risk. What's their stock look like? Let's see. Oh, man, since IPO, they've sold down from like $500 to $3 a share. That's not good. They've kind of been pumped and dumped quite a lot. So I wouldn't touch it. But like you could see the negative here, the serious pump and dump behavior. I just wouldn't touch it, especially with the negative net income. But I love the website. It's so good. I don't know why. It just hits it. It hits it. It's like, yes, robots patrolling the streets, catching all the stray dogs. Pretty cool. Okay. So they have a partnership with Palantir. Okay, you got to clarify what that means. Because I could get a partnership with Palantir if I go learn how to use Palantir software and tell everybody that I know how to use it. We're partnered. So I would be careful. Did they announce it as a press release that they're partnered with Palantir? Joins forces with Palantir to advance public safety. Let's see what it says. Joins FedStart program to expand autonomous security. And it's a press release from Business Wire, which is pretty I'm surprised they would repost it. Fed, okay, so it's called Fed Start Program. All right, hold on. Fed Start Program. Palantir. Hold on. Palantir Fed Start. Here it is. Here it is. Palantir Fed Start. Okay. Join now. Join now. Hold on. Join now. Okay. Open roles, apply. I'm applying right now. Okay. Did I already join? No, maybe not. But do you see what I'm saying? Is I went in 2 seconds and I could actually find the Fed Start program that they mention and mark it and potentially can join it within a few moments. I can join this Fed Start program. Look how many partners they have. Knightscope is one, but look how many they have. It's quite a lot. So maybe we could apply with Prophecy AI, our app, to Fed Start. And if we were to apply here, then when Prophecy AI gets accepted into this Fed Start program, I can say that we're partnered with Palantir. Oh my gosh. That's all I have to do? Hold on. Give me a second. I think, guys, we're going to partner with Palantir. This is going to go crazy. So I'll just show Palantir how we're looking to integrate these AI-driven analytics that scan the ports down on Earth to tell you which ships are going in and out and what the ships are carrying, like soybeans and stuff like that, and AI analytics, so that as an investor, you're able to use AI and not miss what's happening. Don't miss what's happening in the ports. And then maybe we get a Palantir partnership, and then I can tell everybody that we're partnered. See what I'm saying? So with Knightscope, for example, it's like they're saying they're partnered with Palantir. It's pretty cool. It's pretty epic, but just got to be careful, because sometimes, those partnerships are pretty easy to get, but then carry a lot of weight in the hype of the stock. We got to double our price now, says Steve. Yeah, right? That's what I'm saying, man. Yeah, like, let's add Palantir, and then it's game over. Like, what? You guys got me started. Like, I'm actually going to go look and see. Okay, accreditation. Hold on. Can we do this? 1 million plus. We might be able to do this. Dedicated compliance teams. We have a DoD security approved developer on our team. Hold on. Engineering requirements, custom infrastructure, and dedicated engineering. We have that. And we have over 1 to 2 engineers. Opportunity costs. 3 to 6 months. Dude, here we go. So what we might do is we might partner with Palantir to increase the value of our company. Why don't we launch a meme coin for our company as well? Does that sound good? What should we call it? Let's call it Pro. Let's call it Pro for Prophecy. And we'll launch a meme coin. And everybody Daniel says I want my cut. Yeah, man, let's just launch the meme coin for Prophecy AI. Boom. Then we offer a meme coin, it wouldn't be like tied directly to our company. Although personally, I would buy the meme coin more, probably even with company profits. I think that'd be great. And just make it the most of integrity meme coin in history. I love it. So yeah, I mean that's what I'd say. It's just super high risk. I wouldn't touch that stock KCSP or KSCP because of the pump and dump nature. Anyone could say they're partnered with Palantir if they go through that program. So I would just stay away. But personally, hey, it looks interesting. I like what they're doing. Robotics, great market. Worth a look probably in the robotics market to go ahead and add them to our robotics watch list. So let me just add them here. I will stay up to date with them. And I appreciate, I respect the research, what you're doing, and keep up the great work, man. I hope you guys have a great day. Friendly reminder, we just wrapped our daily live trading session this morning. We were trading and we were able to lock in a nice profit on Symbotic stock today. So over a 10% gain on that stock today, which was great. And we bought it yesterday on the big dip. So we were able to magnify some gains as we got a great entry right at the bottom yesterday. So if you guys would ever like to tune on into our daily live trading sessions and get them for free as a bonus when you go grab Prophecy AI here, you can analyze any stock, see projections from the top AI models in the world, Grok, OpenAI, Claude, Gemini, and pair them with the best data in the world and get the tools of institutions in your hands. Then have a look at the first link in the description. You can get StockMate for free as a bonus and start using the software as soon as, right now. We just reopened yesterday. So go have a look at the first link below to go claim it. I appreciate you all. I hope you have a great rest of your Friday. Have a great weekend. Enjoy yourself. And I do hope you got some value